Kaspa's 2026 price realistically lives in one of two ranges. Either it remains a 5 cent to 10 cent asset, trading like a niche proof of work experiment, or it earns a repricing towards 15 cents to 30 cents as infrastructure, not novelty. In the next few minutes, I'm going to explain what mechanically decides which range Kaspa belongs in and why speed alone is not going to make that decision. So guys, this is not a hype story. I'm going to shoot you straight. I'm going to tell you exactly what I think based on the mechanics, based on real world adoption and everything that's going on. Okay? Because Kaspa in 2026, straight up, it is a valuation problem. At the low end, the market prices it like a utility chain. Fast, impressive, but replaceable. So that gives us the support of around the 5 to the 8 cents. But at the high end, Kaspa gets valued as a high frequency settlement infrastructure where speed, finality, and proof of work security justify 15 cents and above. The difference between those outcomes hinges on one structural detail that most of the models don't take into account: whether or not Kaspa captures value above raw throughput. So let's anchor the neutral baseline first. Okay, let's talk about that. If current conditions persist, Kaspa will likely trade between 7 cents and 10 cents through much of 2026. This range would reflect proven technical performance, right? We know what it can do. A fair launch POW narrative. Growing transaction volume from tokens and social apps. But importantly, this range does not assume meaningful fee compression, sticky smart contract liquidity, institutional settlement demand. In other words, speed alone keeps Kaspa visible, but it does not move price out of this band that we're talking about. That's why, despite technical milestones, the market continues to treat Kaspa as a sub 10 cent asset. So why growth does not equal price, right? Here's the disconnect. Kaspa's usage is real, right? We know that. Block rates are live, transaction counts are climbing, and yet price behavior still clusters around 5 cents to 10 cents. Why? Why is that? Because most of the growth is not exclusive. KRC20 tokens increase activity, but not necessarily economic rent. Decentralized social apps generate volume, but limited value capture. And even meme coin activity. Yet while it can get noisy at times, it doesn't anchor long-term demand. The market is saying something very specific to Kaspa right here, right? It is telling it something. And until Kaspa proves it can retain value, not just move data quickly, it will continue trading like a high-quality experiment, not a core asset. That's why strong fundamentals can still equal a low price equilibrium. So what's our mid-range setup? Let's talk about the structure, because this is where the mid-range becomes plausible. Kaspa's architecture is no longer theoretical, right? Ghost Egg allows for parallel blocks. Crescendo pushes throughput to 10 blocks per second. DAGKnight targets sub-second finality. Layer 2 rollups introduce EVM compatibility. If these systems stabilize and attract persistent applications, Kaspa can earn a step up in the 10 to 15 cent range, right? That is definitely possible. But this is a transitional valuation band. It assumes real DeFi primitives can settle on Kaspa L2s. Liquidity needs to remain on chain, not be transient. The fees that it charges will begin to matter. Even if they stay low, fees will matter. But this range, it's also capped. Without institutional demand or very dominant applications, Kaspa still trades as a fast L1, not a settlement standard. And if you want the big money, you got to be a settlement standard. Okay? So what's it going to take for Kaspa to really break out and maybe hit that 15 to 30 cents, right? That scenario is not automatic. It is going to require alignment of several key factors. 3 things. First, throughput credibility at scale. We need to reach and sustain 100 BPS under real load, not test conditions. This reframes Kaspa as uniquely capable among proof of work networks. Number 2, economic gravity. Casplex and app ecosystems must generate non-speculative demand, DeFi settlement, or coordination use cases that don't migrate weekly. People need to stick on the network. They can't just be speculating, trying it out, leave it. We need people that stay. It needs that gravity. And third, external validation. A major tier 1 listing or institutional pilot would be huge, especially tied to an ISO compatible settlement. Changes who is allowed, right? This would change who is allowed to buy it. And only under those conditions do the markets justify pricing Kaspa as infrastructure, not optionality. And that's how you can earn the upper band, not through narrative, but through actual structure. So we've talked about going up, right? What are the downside constraints? How about the risks? We got to talk about those. You have to. So let's re-anchor the downside. Kaspa could still trade back down to 4 or 6 cents, even with excellent tech, right? Everything could stay up, everything could still run as normal, and it could still drop to those levels. But why? Mining has fully industrialized, reducing grassroots participation. Supply dynamics in 2026, they're non-trivial. Layer 2 competition continues to abstract speed away from base layers. Value leakage remains possible if apps don't retain liquidity. This is the uncomfortable truth, guys. A network can be technically superior and still fail to command a premium. Hopefully that's not Kaspa, but man, they got a lot of work to do if they want to break out of that. So if Kaspa becomes fast but not essential, the market's going to price it accordingly. So here's a clean 2026 price map for Kaspa. 4 cents to 8 cents. Speed without durable value capture. 10 to 15 cents. Partial success as an app-capable proof-of-work chain. 15 to 30 cents. Full-on infrastructure thesis with institutional relevance. So guys, none of these outcomes are guaranteed, right? This is not financial advice. Each of these is earned mechanically through Kaspa, what they do, how they execute, not emotionally. Kaspa's real question in 2026 isn't whether it's fast enough. It's whether speed turns into economic gravity. Is it going to pull people onto the chain and keep them there? And in the next episode, we are going to track an on-chain metric that quietly signals when this shift in Kaspa could actually be happening. If it happens, we'll figure it out. Guys, so this is not prediction. This is positioning. And that's the difference. Guys, if you found value in this, please hit like, hit subscribe, and we'll see you in the next one.